Hello, everyone. Welcome, welcome. We are so pleased to have you join us for today's webinar, The Investment Outlook for 2022, Black Investors Weigh In. Thank you so much for joining us today. My name is Nya Holder, and I am Yale College class of 2017 and Yale School of Public Health class of 2018, and I'm so excited to be co-hosting today's session. Today's event is co-sponsored by Yale Fin, Yale Women New York City, and the Yale Black Alumni Association. Accelerate Yale is a global community of diverse alumni and friends of Yale engaged in innovation, tech, and entrepreneurship. Our mission is to cultivate an active, inclusive ecosystem that thoughtfully promotes meaningful connections and collaborations, while also serving as a bridge between alumni and current Yale students. We encourage all of our participants on the webinar today to drop your names, drop your contact information into the chat so we can see who's here and so that you all can stay connected with one another. Please note that today's session will also be recorded. And so with that, all of our participants will be muted. Today's session will be an hour long and we'll reserve the final 25 minutes for your questions. So if you do have a question, go ahead and submit it using the Q&A button at the bottom of your screen. And now I have the pleasure of introducing our moderator for today's conversation, Gary Stewart. Gary is Yale College class of 1996 and a graduate of Yale Law School class of 1999, the founder and CEO of FounderTribes and a leadership team member of Accelerate Yale and Yale Angels. So Gary, over to you.
Thanks so much, Nya. I'm super excited to kind of be able to have this conversation with 5 amazing panelists. So we have Kevin Burrows, Paula Campbell Roberts, Charisse Conanan Johnson, I hope I said that correctly, Akobe Sandy, and Sid Smith. But I'm not going to do the hard work of actually introducing them. I'm going to allow them, like great entrepreneurs, to introduce themselves. So why don't we start with each of you giving us in 1 minute kind of your 1 minute pitch, including some elements of your personal life, like who are you as a person, as well as your professional life. So let's start with Charisse.
Thanks so much, Gary and Nya. It's a pleasure to be here. Thank you so much for having me. My now 50-second background, currently sit in Chicago. I am a mother of a 3-year-old, so very active at this moment in time. Yale graduate of O2, we'd like to call it O-Deuce. And by day, I am an investor, I am an author / entrepreneur, and I'm a strategist. On the investor side, I sit on the Bulldog Innovation Group, which is Yale's alumni venture group investing in other Yaleys, as a author of a recently published book called A Wealthy Girl. So I consider myself the original wealthy girl. And then finally, as a strategist, I lead a firm now, about 50 individuals called Next Street, which is all about creating an equitable small business industry and changing the systems and structures that might be holding that equitable small business from doing the things that it needs to do to grow. So that's me.
Awesome 1 minute pitch. All right, let's go next to Paula.
Thanks, Gary. Great to be here with everyone. Wish we were on campus, but this is close enough for now, I guess. So I'm Paula Roberts, Yale College class of 1998. I was a member of Berkeley College. I'm a mother of a 7-month-old, and I have 2 older daughters who are 18 and 20. I'm married to an investor entrepreneur, and we proudly live in Brooklyn. Together, we're also active angel investors in a variety of different businesses globally. Professionally, I'm a managing director at KKR, which is a global private equity firm based in New York. I lead a global macro and thematic investing team with a focus on consumer and real estate. And what that means is we work to identify the big tectonic shifts that are happening in the world from a macro or secular perspective and get the firm to invest behind those big themes. Excited to be with you all today.
Awesome. All right, so let's go next to Akobe.
Hi, thanks for having me. It's good to see everyone here on the panel today. So I'm Akobe Sandy. I'm currently an impact investments officer at the Robert Wood Johnson Foundation. RWJF is the nation's largest philanthropy, solely focused on healthcare within the United States. And really our mission is to work alongside others, building a culture of health that really provides everyone in the country a fair and just opportunity for health and well-being. And we're doing that through grant making as well as through impact investing, which is why I joined the foundation. So I view myself as someone who really is trying to wrestle with how we use our capital and steward it for good. And that's what I do, as my day job. And I guess my other job is just being a husband, a father of two young boys. And just excited to be on the panel. I'm currently in Chicago, and we'll be moving to the DMV area later this year. So looking to connect with any Yale alum out there as well.
Awesome. And so I don't think I see Kevin, so I'm gonna say last but not least, Sydney.
Great. Thanks a lot, Gary. So I was Yale class of '89, still I'm in college. I played basketball. I was a member of St. A's. I've got two kids who escaped out to the West Coast. I live in Chevy Chase, Maryland, right outside of DC. I've got two kids who are in the LA area in college, and a wife who is an entrepreneur who I actually met on the basketball court playing pickup ball. I launched a fund last year, Non-Sibi Ventures, which is a Black-owned and led Series A and seed fund that invests primarily in technology companies where our team has deep expertise, mobility, sustainability, Industry 4.0, and education. We've got goals of investing in 67% underrepresented minority founders and 50% women founders, and a target AUM of 50 million. We've invested in 5 companies to date. If you're curious, non-sibi means not for self in Latin, and was one of Andover's mottos, which is where I met my co-founder, Kent Lucas, who was my high school roommate and teammate. A little bit more on the personal side, one of the most influential people for me was my father's brother, my uncle George Bundy Smith, who grew up going to segregated schools in DC and was recruited to go to Andover, class of '55, and then went to Yale, class of '59, and later to the law school, class of '62, which he attended with his twin, my aunt Inez Smith Reed. And for, so what it meant for me was that those places and communities were familiar. My family expected me to be there. I felt like I had a right to the benefits and privileges that went to members of those communities, and an obligation to open doors to others who hadn't yet been invited in. And it's with that mindset and spirit that we started Non-Sibi Ventures.
Awesome. So we have like a lot of Black excellence on the panel. And I'm going to start the questions now with Paula, because I think when I sent the questions early this morning, I kind of said, the world is a crazy place right now. And then I turned on the news and I saw that it's become even crazier. It looks like World War III is about to start. Putin's gone crazy. And in addition to this, you have all of the issues about inflation. You have, the Great Resignation. You have supply chain issues. You have political instability all around. So what do you consider to be the economic outlook or the outlook for economic growth in the US? I mean, with all of these different factors, should we be worried, or what do you see as the major risks and how do we mitigate them?
So how much time do we have, Gary?
You have a minute.
Exactly. I'll sum that all up in a minute. And before I even go there, brother Sid, I'm also from St. A's. It's such a pleasure to connect with you on this call. I love connecting the dots always.
A sister in the hall.
Sister, that's right. So back to the complexity that we now live in. I think from a base case perspective, economic growth has certainly peaked, right? We're sort of at the mid to the end of this economic cycle, given the rise in interest rates and the like. But what's complex about what's going on is exactly what you described. High inflation, COVID still a real issue in many countries in Asia. You have the Russia-Ukraine issue, which I'll contextualize for the group. So while overall I'm kind of constructive on the economic outlook, the risks definitely skew to the downside. And so we're watching them very closely, including what happened this morning. So if I start with talking about Russia and Ukraine, I actually think there are two pieces of this. one is specifically what's going on with Russia and Ukraine. I'll just talk about it at a very high level, but really it's a symptom of what's going on and has been going on for the past 10 years. And so with Ukraine, I think we all know clearly, I don't think it's a surprise, it's been well telegraphed. Putin is trying to reestablish his sphere of influence. The West is responding as a bloc and will implement trade and financial sanctions. What that means to us is probably not an all-out war that engages the US, given that the Ukraine is not in NATO. But what it certainly will mean is, one, my heart goes out to the people of Ukraine and Russia. There's certainly lives that are going to be lost. But from a macro perspective, this will impact gas, oil, metals, food commodities. So the already high inflation prints that we've been seeing will only start to tick up higher. And this is, a particular concern or issue for investors who are, leaning into middle and lower income consumer segments, right? Because that group is already concerned about disposable income and real disposable income being eaten up by inflation. And that's only going to get worse at this point in the cycle. The wild card is all about the central banks, right? So how are central banks going to respond to already high inflation? You throw in even higher inflation with this situation, and that is where you start to think about the recession risk. But the second, more broader point that I'll make about what's going on is we're in the midst of a transition from what we call, an era of globalization to an era of great power competition. So in the 2000s, we were all talking about the WTO. Let's all work together. Let's all work alongside our shared interests. Today, it's more of a zero-sum game where you have big powers competing on the global stage. And that just creates conflict or difficulties for all of us. Again, if I had 3 more hours, I could tell you a lot more, but I'll stop there.
So I'm going to ask a follow-up question, since that was like a beautiful answer. I mean, because I think you said that, we can kind of limit it to the Ukraine, so there's not really a kind of specific concern for the US. But I mean, I think that a lot of people are saying Putin isn't going to stop at the Ukraine. The sphere of influence is the former Soviet Union or Tsarist Russia, whichever one you want to use. It's not Ukraine per se, it's just a starting point. How do you think that would affect kind of, your assessment of the outlook? And I guess at the same time, there are other nations around the world, China, et cetera, that can say, yeah, well, we also have like our spheres of influence and we want Taiwan back and Hong Kong. That was just the beginning. So how do you see all of this playing out? Because I don't think that this is just going to be this one-off. I think it's kind of, as you said, maybe a more fundamental shift of these great powers, like saying, let's carve the world up. In America, you're not strong enough to hold two of us off at the same time.
I think that's a very fair point. I'm certain that Russia won't stop here. And the big point that you made is really China. Whereas Russia operates in pockets, so depending on where you're invested in or what companies, what sectors you're invested in, you're more or less exposed to Russia. On the other hand, China is integrated into the global economy. So to the extent, the China issue, continues to rear its head. That's where I think that broadly impacts all of us, and that's certainly what we're watching. We've benefited for the past 40 years from a free movement of capital, of data, of people and goods. And going forward, we're just not going to be able to do that, right? The idea, I actually have a friend in the UK who hopefully is on the call. I've been trying to send a present for his baby for months now, and it's just much more difficult to do today than it was a year ago. And that's just a very small trite example, but the movement of capital and goods is just going to be much more difficult. And as entrepreneurs, we need to think about both from an opportunity perspective and a risk perspective, how we position ourselves.
All right, awesome. So let me go now to Sydney. Sorry, I always call people by like the first syllable. So Sid/Sydney. I guess let's go to the micro level now, because on the one hand, we should all care about Ukraine and stuff like that. But as Black people, we got a lot of problems of our own, some people would say. And, to the point Paula made, like, it's really difficult for us to access capital, even in our own country, even before Russia, China, COVID, et cetera, et cetera. How do you see this playing out? I mean, what have you seen over the last few years in terms of this focus now on the local and the fact that we actually do need to do things to support Black fund managers and Black founders, female founders, Latino founders, et cetera? Do you think that there has been this fundamental shift, or do you think it was just kind of a kind of moment of virtue signaling that people felt really bad after George Floyd and they put a little bit of cash into it, but they're not really that serious? And now that their attention is going to be focused on other things, they'll just start to forget about Black people again.
Yeah, I do think that there has been a shift. I'm cautiously optimistic. I mean, if we take a couple steps back, chronic underfunding of minority communities and women is by design, and it always has been by design. U.S. capitalism was built and thrived upon free and cheap labor. So, it's not an accident that dollars flow heavily to certain communities, and at best they trickle to others. And it's not an accident that minority teachers and police and firefighters, bus drivers, other city and state workers pour their hard-earned dollars into pension funds that have historically failed to make allocations to minority fund managers and others who want to redistribute wealth to communities of color. And one other thing that I think we have to focus on is that gaslighting has also been an important part of the equation in creating disparity in the country. So, we've got narratives that Black and Latino communities need to be more heavily policed because they're more dangerous, that wealth goes to those who've earned it. And part of perpetuating those false narratives is maintaining separate communities. And I keep talking about community because I think that's going to be so important to creating lasting change. And when you have the separate communities, you're never really challenging those false narratives in effective ways. So with George Floyd's murder, I think that changed things for a lot of folks. They couldn't look away. It was right there, and they had, there was a reckoning. And so I do see some lip service among institutional LPs and other funders, but many, many more have stepped up with real dollars, and they're starting true dialogues and building communities of change and practice and understanding. We're seeing it with more diverse funders, management teams in the boardrooms and other places where people are being really intentional about change. So I'm optimistic, but history has shown us that the pendulum swings pretty quickly. So I'm cautious.
Yeah, no, I don't want to kind of overdo the analogy, but I think that what's interesting about the Russian situation is that when people feel they've been ignored or treated badly with a lack of respect, sometimes they can do pretty drastic things. And I'm just wondering, like, in the minority communities, I'm not sure how much longer people are going to be willing to just deal with the fact that women and minorities make up 72% of the population. And if you add working class whites, that's 92%, but they get cumulatively less than 10% of the funding. So what do you think needs to happen to kind of really make some sort of like fundamental shift? Because I do think, getting like an extra Black fund manager here and putting an extra $10 million here in a market that's worth $650 billion, it's not performative, but it's not substantive either. So what do you think needs to happen so that we can kind of start to see systemic change where it starts to look more like the population is reflected in who gets funded, as opposed to now, instead of having 0 Black founders getting funded or 0 unicorns, we have 1 and we're all singing Kumbaya and clapping our hands? Like, how do we actually change this fundamentally?
Yeah, I mean, I think we have to, I'm going to go back to communities. I think we have to build diverse communities that understand that economically diverse ecosystems are good for everybody, that they drive innovation and efficiency. And, for 10 years, I was general counsel to Syncom, which was, the oldest and largest Black owned venture fund, had, 400 million AUM. And we largely operated in a silo. Folks weren't inviting us into their deals, to syndicate deals with them, the majority, venture firms. And so, we did not have sort of that community. I was also general counsel to the National Association of Investment Companies, which is, private equity and venture association for underrepresented minority fund managers. And again, folks weren't really reaching across the aisle to say, hey, let's build a community together. So I think that's really what needs to happen, is that people understand, venture capital by its nature requires building communities that are interdependent, companies, customers, funders, service providers. And if at each level we have a discussion, a real discussion, and dollars flowing to make each one of those constituencies more diverse, hopefully we'll have lasting change. The other thing is that there are organizations out there like Black VC, which is creating access and education for Black funders. Illumin Capital, founded by Darren Dodson, that has built a bias reduction program for fund managers, and they're doing important research in the area. Our fellow Yaley and my teammate Johnny Rice, who started Management Leadership for Tomorrow, that's providing opportunities for people of color to climb the corporate ladder, and several other organizations that are really working to create fundamental change.
Awesome. So let me go to Kevin. First of all, welcome. I'll let you do your 1-minute pitch. Like, tell us a little bit about yourself in 1 minute. And then the question I'm going to ask you afterwards, so you can already start thinking about it while you're pitching, is, if we've gone from kind of the macro, like world geopolitics, to kind of like the Black community in America, we see that Black people still are kind of like dramatically underfunded. But then when we talk about the Caribbean, I don't even know if that's even on anybody's radar screen. And that's kind of like where you've been focused. So I guess the question I'm going to ask you is, if it's so difficult to get Black people in America funded, where we're like 14% of the population, blah, 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 we can move elections, how do you get people to actually focus on the Caribbean, which I don't think is on very many people's radars? And what do you think is going to be necessary to jumpstart a true entrepreneurial ecosystem in the Caribbean? But first, if you can just introduce yourself. I think you're on mute.
Yep, unmuted. Yeah, thanks, Gary. And, I'm glad I made it. I was on before, and they used that time to change the switching out in front of the university, and we lost internet completely everywhere. So glad to be back. So yeah, good afternoon, everyone. So Kevin Burrows, Davenport, Yale class of 93. And for the last 9 years or so, I've been running a Bahamas-based investment consultancy called Diomedea Capital. My background has been as a portfolio manager, investment strategist, asset allocator for offshore banks, fund of funds, family offices. Most recently, I worked with a company called Diomedea Capital as the chief investment officer. We are a Miami-based asset manager, like you say, focused on Caribbean venture capital and private equity investing. So, so the question you asked is kind of interesting, but, I think in answering this, I can show that perhaps what we're doing with Diomedea Capital and what we're trying to do with the Caribbean is showing that we're not really playing in the same sandbox as sort of the overlooked Black founders that you have in the United States. So, again, first of all, I like to use the expression, and I've used it before many times, that what we're doing in the Caribbean is FUBU investing, right? I'm dating myself. I'm a child of the 80s, but this is investing for us, by us. So as independent sort of Black majority countries, we have our own investments, savings, pensions, government institutions, institutional capital that needs to be managed. So one of the arguments what we have, and in setting this up, is that this capital needs to be managed internally here in the region by those of us living here, and not from the US, not from New York or London or Hong Kong or Geneva or what have you. So that's really one of the primary aspects of what we're doing. Secondly, you talk about the Caribbean and how tiny we are and everything, which we completely agree. But my asset allocation sort of frontier market argument is really geared towards those investors that are already keen to invest in the region, even though we're usually lumped into sort of Latin America and the Caribbean, that catch-all, right? So what we're saying is the Caribbean has its own risk-return dynamics that deserve separate consideration from Latin America. So that's what I'm trying to do. Let's break that Latin America and Caribbean, and let's just focus on the Caribbean, because we're not the same dynamics there. So interestingly, when you make that asset allocation argument, and like I said, I've been allocating money most of my career and never been able to do it in the Caribbean. We're not making a race argument because, again, we're not underrepresented minorities in our own countries, right? We are majority Black-owned Black countries. So it's kind of like in the movie Django when he says the D is silent, right? In this case, the color of the entrepreneur that we're investing in is not the primary determinant. We're trying to invest in talent, and that's talent full stop. But through the demographics that we're making that investment in, we're de facto supporting Black entrepreneurship. The final investor group we're targeting is the whole Caribbean diaspora, whether they're living in the US or in the UK, where you are, Gary, or wherever, Latin America, Black people everywhere. So, these are people who left to make better lives for themselves and their families. But of course, they still have strong family and cultural ties to the region. So we're providing ways for them to invest back in their home countries. So, Nya, Akobe, I've seen from your bio, you guys have, you are of Caribbean descent. You are our target market when we set this up, and when we set up an ability for U.S. investors to invest in the Caribbean in a fully regulated manner. So, yeah, I mean, it's not. I'm trying to get a piece of the 0.2% of the capital that's flowing to the Black entrepreneurs. No, I'm trying to create a whole new asset allocation class of my own.
Awesome. All right, so I want to go now to Charisse because you have a book that has a very provocative title, A Wealthy Girl, and you say that you don't have to be male, rich, old, or white to be wealthy. I'm at the Yale Club right now, so they don't kick me out for just saying that. And you also offer 7 steps to prosperity, peace, and personal power. So tell me, how do we become wealthy? What do we need to do?
Absolutely, love the question. So in order for me to answer that, I want to just share a little bit more about my background, because that influenced why I wrote the book. And so I come from post-Yale. I was struck by the discord that I saw inside the walls and the outside the walls, as everyone on this call knows, and being in New Haven. And so that led me to Wall Street and became a portfolio manager for many years, managing larger institutional equity investments. Left that field because wealth isn't just about equity investments and traditional asset allocation. It is about entrepreneurship, as we've been talking about today. And so as I thought about wealth, also in the context of being a Black woman with Filipino roots, I came to the notion that we can't accept the traditional notion of wealth. Wealth traditionally is defined as your assets minus your liability, and you have your net worth, which on paper at a moment in time, we know in this country right now, all the stats say white wealth is 10 times more than Black wealth, for instance. And so because, and Sid, you touched on this, there are many, many historical reasons why that is the case, constitutional ways that have locked us out. And so defining us solely on that measure is irrespectful, I think, of everything that we bring to the table for a system that didn't have us in mind in the first place. And so the first thing in becoming wealthy is reframing the wealth definition. And so wealth is, yes, that traditional means, but it's also our intangible assets, our relationships, our faith, our cultural capital, right, Kevin, that you talked about, and being from the Caribbean, like all of these other pieces that also help us define wealth. And so I am challenging us to think of beyond the bank accounts, to think about that wealth. And a couple of the steps, just because it's important, particularly in how to become wealthy, is one, having the investor mindset, which is rooted in claiming for yourself that you can be the CEO of your own wealth. There's no one that's going to be able to set that vision for you. Second step that I just want to share a little bit about is going about wealthy experiments, which I define as the art of learning, testing, growing, failing, so that you can get the kind of wealth that I defined in the beginning. I think about my husband and I, and one of our biggest wealthy experiments was, investing in a young woman who was trying to do more in the entrepreneurial space, had no idea about, her background so much, but more like what she wanted to do. And then the third piece, I would say, one of the steps is creating wealth circles. Opportunities, 10 to 12 people. In the Caribbean, you might have called that a susu. But in here, we also call it the ability to have like-minded individuals, not just for the pursuit of that traditional, but for the pursuit of the untraditional, such that you can push forward the wealth goals of everyone in that group.
And speaking of wealth circles, you're also, I think, affiliated with Bulldog Innovation Group, which is a group for Yaleys, like looking for funding to get supported by other Yaleys. Can you tell us, since there are a lot of Yaleys on the call who are probably entrepreneurial looking for funding, what do we need to do to get the money? What do we need to do?
I know, write the check, get the money. So Bulldog Innovation Group started roughly 6 years ago at the beginning of 2016. And the fund today, it's a It's a small fund, and it was started by alums wanting to invest in other Yale alums. And that's the whole point for us, by us, FUBU, right, for Yale. We write checks of $100,000. You can go to bulldog.vc to see the current 21 portfolio companies in there now. That's the average check size that I mentioned, sector agnostic. However, today, the fund is closed to new investments. We're just making follow-on investments to the existing portfolio, but actively exploring whether or not we are raising, the second fund. So unfortunately, no net new capital going out the door, but we're always happy to also make connections. If you are an entrepreneur and seeking some advice, we have a bunch of limited partners or LPs that are always looking to support Yaleys, because that is the mission of Bulldog Innovation Group.
Awesome. And so Akobe, you're another source of funding, and in a space that seems to be really hot right now, all of this like impact investing, ESG type stuff. So tell us a little bit about kind of what your investment thesis is, or how you guys kind of give money to founders or to organizations, and also a little bit about like how you've seen the whole impact in ESG space evolve over the last, like, let's say 2 years.
Yeah, definitely. So, the way that we invest at RWJF, we're an impact first investor. So for us, it's really important to tie the use of our capital more so to specific outcomes that we're looking to generate and drive. And really being a foundation that's focused on healthcare, we're really trying to support and invest in conditions and elements that really advance the social determinants of health. So from that standpoint, I think there's a lot of different ways that you kind of see that playing out. We're active essentially within elements around supporting the provision of capital, really through to ensure that communities really have the ability to thrive, and so supporting the specific funnels and intermediaries such as the community development finance system. We're also really trying to target our capital in a way to advance racial equity. So the foundation a couple of years ago realized that one of the largest, if not the most significant, barrier to health in this country is really the barrier of structural racism. So how do we go about actually creating conditions and working against the systems and structures that create inequities? And so we really try to focus our capital, to be able to do that. And through our racial equity focus, essentially, we're really trying to address issues and attack issues that are proliferating and really adding to the racial wealth gap. And so for us, that means looking at what does it mean for there to be more access and equitable access, essentially, to ownership for people of color in this country, whether through we're looking at residential ownership, through entrepreneurship and small business, and even around employee ownership and how we can invest and support those efforts. And even if you would say on a more disruptive and future aspect, looking at really how is it that we can control financial assets, because what we're concerned about is not just what the racial wealth gap is now, but essentially what that might be looking like in 2040. So in the future, how are we really addressing that through our capital? And it's really important that I think impact investing really has the ability to draw eyeballs and dollars in this way. The field itself, and when you look at sustainable investing overall, it's really young, right? So ESG is, I think it was coined or really gained foothold in the mainstream more around 2005. Impact investing, the term itself only has been around since around 2008, 2009. So right now we're really in essentially our teenage years, right? It's really important to figure out what the future is going to look like. And I think there's going to be a lot of change and evolution for us to really use capital to connect more closely to community. And we're trying to figure out what, sort of as sustainable investors, we're going to look like as adults.
Awesome. So I think that's kind of a good segue to the next question, which I'm going to ask first to Charisse and Paula, which is that, like, I think a lot of the conversation's really been about kind of tech startups or startups that are looking for venture funding. But I guess the vast majority of Black founders are actually not venture backable companies. They're mostly solopreneurs, sole proprietor organizations. What should we be doing to support those folks, which actually represent the vast majority of Black entrepreneurs that can't access financing either, don't really have accelerators, incubators, or anyone talking about their issues. But if they were actually able to go from solopreneurs to like a 2-person or a 3-person band, can fundamentally change communities. So maybe I'll start with Charisse and then go to Paula. Like, what do you think about how we should be maybe changing the conversation a little bit from trying to create the next Facebook from a Black person to just helping Black and brown and female businesses, full stop? Charisse.
Absolutely. And just I wanted to add to the context here. There are over 32 million businesses in this country. 80% of those are sole entrepreneurs or sole proprietors, and just a little under 15-20% are, everything else, right? But that 15% is that sort of main street, also moderate growth, and very small is tech and high growth. So I think it's spot on to be focusing on the vast majority of businesses, particularly those owned by us. A couple of things I would say in terms of supporting. I think it needs to be a very holistic approach. So we're talking about corporates, we're talking about philanthropy, we're talking about financial institutions, we're talking about even alternative financial institutions like community development financial institutions, and government, like let's not forget government, which will spend over $100 billion over the next 5 years to support small businesses in the way I've defined them. So you need every single one of those entities, whether you're sitting in one of those entities now, who are you hiring from in terms of those small businesses? How are we working through our supplier diversity, but also supply chains to get more of those recurring income streams to hire and have goods and services produced by some of those small businesses? If you're a government and whether it's city or county or state, how are we using the American Rescue Plan dollars to target Black and brown businesses and agitating around the proximate needs? Sid touched on this earlier, but for all small businesses, that they can not only get the capital that they need, because let's not forget, Black-owned businesses are financed on the debt side a third of the way the rate of white-owned businesses. And so, and I think also at the sort of holistic level, it takes levers in each of these areas to really change the system, because our system right now that supports entrepreneurs and small businesses like us is broken. I'm pretty confident in that. And so we have to start to change some of these cultural norms that have prevented us from creating the right credit boxes, or prevented us from creating the right access, because again, we've been locked out of that. And so I actually want a more systems approach that starts at the higher level order, because personal responsibility will only get you but so far. And you can have all of the grit and tenacity that you want sometimes. And I've experienced this in my own desire to start a business and my own journey. But sometimes these other forces are difficult, and we need organizations. And my company, Next Street, which I work now, is really trying to work with some of these institutional players to change some of those systems and structures.
And Paul, I guess the same question, but just another data point. I think Morgan Stanley said that if women and minorities kind of operated businesses at the same rate of their percentage of in society, that would add another $4.4 trillion to the US economy. So there's also a lot of money at stake. So how should we be going about focusing not only on finding the next Facebook, but also supporting all businesses from all people?
It's a terrific question. And, I want to start with small businesses for sure are the bedrock of the economy, regardless of race, right? We focus a lot on the larger corporations, but it's really small businesses that help our economy to thrive. The important aspect of this, though, is I think going back to what Sid said, thinking about community and thinking about skills, right? Because you can start a business, and if you start a business and put your personal wealth at risk, that, that may not be the best way to approach it, for example, right? And so that's why community is important. And I think we're very fortunate to have gone to Yale and to have all the networks that are, just represented on this call, because it's very important to tap into expertise in particular industries, tap into expertise in terms of how to start a business, what to do, what not to do. The point I'm making about starting a business is, when you start a business, you definitely don't want to use your own social security number, right? Like something as basic as that, not everyone knows. And so while having that idea and starting your own business is certainly the way to build personal wealth, right? That's a tried and true way that many have followed. You have to do it in a smart way. And how do you get smart about that? Well, that's leveraging your community. And again, we're very fortunate to be a part of the Yale community, so that there's so many people we can connect with. And then to your point, Charisse, I agree. There's so many venture groups, even larger corporations that are looking to support our communities. So we should tap into those networks. Akobe, as you were describing, we have an employee ownership group. We're working on several, sort of lowercase a affordable housing initiatives that I'm involved with. We should all connect with each other. And that's the way I think that's the path forward.
Perfect. And I guess flipping the question now to Kevin and to Sid, what do you guys think about this? I mean, do you think that there is too much focus on high growth venture startups, that we should be doing more to focus on maybe just kind of normal businesses? And I guess what advice would you have to a Black founder in either category in 2022 that's trying to start up and they're like, I don't have the money, I'm not going to be able to be, venture backable for the near future? What sort of advice would you be giving to those sorts of founders? Let's start with Kevin.
Yeah. No, it's an interesting question. Again, here in the Caribbean, what I'm trying to do is even just create that whole entrepreneurship ecosystem that you have at least existing in the United States or in the UK. It may not be serving you well, and it might be broken. Whereas in the Caribbean, we're still trying to build that ecosystem where that conversation can even take place. So so accelerators, crowdfunding, things like that. There's a company that just launched here in the Bahamas called Arawak X, and they're fully regulated electronic exchange and a crowdfunder that actually doesn't just serve the Bahamas or the Caribbean, because we set it up as a global exchange. Some of your American founders and entrepreneurs can actually list in offshore, but raise capital in that way with a lot less red tape than it takes to deal with in the United States. So, as kind of the one still sitting in the Caribbean and wearing that hat, I want you guys to include us in your ecosystem as a nearshoring opportunity. I mean, you guys know us, you're familiar with us, you've all come down here and partied with us, but include us in sort of talking about capital formation that we can service, because again, we want to be the gateway to the rest of the world for everyone who kind of looks like us on this panel. And again, we have strong independent governments, we have legal systems that support that. We've been beat up as being offshore tax havens for a long time, but we've been doing this investing stuff for 50, 70 years, so we're kind of good at it. So when you think about even setting up an asset management company or the like, it doesn't have to be under the US and under all of that red tape. But certainly, trying to build that ecosystem is really what I'm focusing on, because I can try and raise 100 million private equity fund to invest in the Caribbean, but where am I going to put that money? I mean, how do I find, the 1,000 guys who might need 10,000 or 100,000? It's kind of difficult to do when you're dealing with, Paula's level of money with KKR. You need a proper infrastructure to be able to push that money to people who really need it. I don't need to invest in a $100 million infrastructure deal. Other people can do that. That's not helping the people who I want to help.
Awesome. All right, and Sid, what do you think? What should a founder be doing if they're not quite venture backable now and they need the capital and they don't want to put it on their credit cards? How should they be approaching 2022?
Well, I think one thing that's really important, and Paula alluded to this, going into business isn't necessarily for everyone. And as a young lawyer, working with, mostly white entrepreneurs at a large law firm, I realized, and then I started to work with founders of color, and I realized there was a real disparity in education around how you start a business. And so I think the education piece is really important. One of my partners in non-SIBI also has an organization called Formation Ventures. My partner Samra, who's also a Yale, and she's teaching Black high school kids and college kids all about entrepreneurship, how to start businesses. And so they're at least exposed to it. If they don't go on to start their own business, they know how to invest in those businesses. They know how to assess those businesses. They know more about the risks of starting those businesses. I also think we have to zoom out. I kind of have 4 or 5 jobs at this point. So I co-founded non-SIBI, but I sit on a bunch of boards around education and equity and access to capital. I've collaborated with other organizations. My brother-in-law, who's an investor in our fund, Maurice Jones, is the CEO of 110.org. And if you all haven't heard of it, they've committed to working with top employers to create 1 million jobs over the next 10 years for Black folks without a 4-year degree. And so I think if we collaborate and sort of work together and think about, different sectors of the economy, that's really important. Specifically, what I would say to, folks who are starting a business is really understand the fundamentals of creating a business. Make sure that you're in a place where you're going to take that on and you're in a position for success, and reach out to the networks. Just go ahead and reach out. And, at non-SIBI, we'll work with folks, even if we decide to pass on them. We'll try to send them to somebody else, or we'll spend, that extra effort to really talk to them about, their business and ways that they can succeed.
Awesome. And so, Akobe, I'll ask you the last question before passing it on to Nya, because we only have 10 minutes left. So if you could be quick. But the question is, and how do you do this if you're an entrepreneur in the impact investing space? The other day, I was talking to a big impact investing entrepreneur, and she was just basically like, don't even use that label. Investors won't take you seriously. They think that you're basically a charity, and therefore you're just by definition not investable. And there is this kind of stigma attached to startups that say that they're, in impact businesses. And I guess to Sid's point as well, there's also this assumption that they just don't understand the fundamentals of business. They're more driven by the mission than they are by the business fundamentals. So what would your advice be to an entrepreneur that, despite all of that, says, I'm an impact entrepreneur, but I still need to raise money from folks who may not also be impact investors. So how do I navigate that?
Yeah, I think the most important thing is just knowing your audience. So for, I think it's important to your business has to make sense, and you have to be profitable, and there has to be returns, and that's key and first and foremost for any type of investor, whether it's on the impact side or the more conventional side. But really, I think trying to understand and get a sense of sort of where priorities might be is really important, and just understanding and capturing what the focus might be for that investor base that you're looking to go to. So that's the first thing I would recommend. I think on the impact side, what we really do is look and interrogate where impact is, throughout the business model. And I think there's different ways that can be manifest, and it can show up, and whether it's impact that's happening, sort of at the founder level, and in terms of the diversity of the team, the leadership, the advisory board, things of that nature, or sort of the products and services that you're providing and who you're providing them to, sort of the end customer, the end beneficiary. So I think there's different ways that you can look at it, but fundamentally it's always going to be a sense of does this make financial sense? And is it returning capital back to the investor? And investors will have different return expectations. At our foundation, I mean, we take on a lot of times a more concessionary approach, but we do that from the standpoint of trying to de-risk other investors, because we recognize that they have a specific threshold that they're looking to be able to meet. And so at the end of the day, it still has to meet snuff. It still has to be able to look and feel and taste like a legitimate investment. So I think it's just really the audience and trying to make sure that your pitch really fits with the audience that you're speaking to.
Awesome. Well, with that, thank you guys so much for an informative kind of discussion, and I'll pass it over to Nya for the audience Q&A.
All right, we have a few questions in the chat, and I encourage you all to continue to plug in questions using the Q&A button at the bottom of your screen. So the one that we have: as a Black Yale founder, how do you navigate the tech ecosystem while acknowledging your Yale alumni access, but still create relationships with other Black founders? I.e., as Yaleys, we are a few emails away from our investment opportunities, but some have no connections. Any takers on that question?
So is the question basically how you navigate privilege, or how do you navigate the Yale network?
Yeah, my understanding is how you navigate Yale privilege as you build relationships with other Black founders. Yeah.
Well, if no one's gonna, I mean, you just do whatever you have to do to get the money. Like, that's the way I look at it, right? You have enough disadvantages as a Black founder that if you finally have one advantage, take it and run. But that's just me. What do the rest of you guys think?
Yeah, I mean, I can jump in. You know, back in 99, 2000, I created an organization called The Exchange here in the DMV, and it was just Black tech execs, you know, venture capitalists and others. But we invited people in, even who didn't have, you know, privilege, and we tried to share our networks. And so I think a lot of this is going to be local. From that, we tried to create an organization. It was an offshoot of the NAIC called the Marathon Club, now the Marathon Foundation, which supports entrepreneurs of color. And so I think a lot of it's going to be local, and I'd be happy to, you know, to give you some, you know, specifics on organizations in different areas of the country.
Can I ask a follow-up question to that? Sorry, Nya, I was going to ask, but like, have any of you ever seen it as a disadvantage to be a Yalie? Because I think sometimes what I've seen is that people basically say stuff like, oh, you're not the intended beneficiary of these, you're already privileged because you're Black and a Yalie, so let's give it to the person who, and then you almost feel like you're kind of like doubly negatively affected. I don't know if any of the other panelists have ever had that, or how you think about that.
Yes, Gary, I think it's a great follow-up question. And I feel like, I know I experienced that, and raising money for my first company, angel money and then venture money. I was always given the response, well, you went to Yale, so you shouldn't have trouble accessing dollars, number one, or two, you are a privileged Black Yalie, so you talk to other Black investors in Yale's network and get them to fund. So then I definitely feel like I got that response, and I feel that in order to overcome that, it's one, an education of the potential investors. Like they often need to be, I'll call it woke a little bit into the realities of being Black, regardless of the education in this country. And for many of the stats that I showed. Number two, I do think that I relied on a peer network that was expansive. So definitely non-Yaleys, that peer entrepreneurship group, and it was about 8 of us. We were able to share investor connections, opportunities for hiring. It became one of my best sources for exchanging ways to move toward milestones, and really sort of address some of that commentary that I got that quite frankly it's just disheartening, and you have to find ways around it.
Got it. Thanks. All right, we have time for one more question. Oh, it looks like we just had one pop into the chat. Are there any startup communities for founders of color that you'd recommend joining besides Slack, especially for those of us still in the pre-seed and seed stage? There's nothing better than to be surrounded, hopefully in person soon, by people who share similar goals and can provide mutual support to overcome challenges in this journey. Any suggestions on startup communities for founders of color?
Gary, have you talked about FounderTribes? I think that's sort of
Yeah, I didn't. I was like putting it in the chat right now, actually.
okay.
But I think that's exactly what FounderTribes exists to do. It's basically trying to reimagine the way that we network so that you can network with people who have something in common with you, and help entrepreneurs in this way then to unlock social capital, which is really important. All of these networks that can make the warm intro to an investor, to a funding source, or to a corporate as a business development opportunity. And then also to kind of what are the different sources of funding, helping founders to get the education so that they don't think they all need to go into venture capital when the vast majority of them are not going to get it. But then they also understand that there's a full range of funding options that they should be contemplating as well. So I put in the chat right now it says to only the hosts and panelists, over to everyone, that if you feel like you want to be part of a community and you feel like you're currently locked out, obviously everyone in this panel can be a source of guidance and support, but also feel free to reach out to me. And I put my email in the panel, so you can kind of do that as well.
Yeah, and two, I dropped in the chat, Tech Rise. It's mainly for Chicago-based entrepreneurs, but anyone can join, quite frankly, and it's specifically for Black and Brown tech. And so it was started by a Yaley who's Latina. And so again, Black and Brown folk, if you are in Chicago, but again, it's open. The second one is called Verizon's Digital Ready platform and portal. Their aim is to reach over 1 million Black and Brown small businesses over the next 10 years. Community of connecting with other Black entrepreneurs, lots of everything free advice, and the ability to get potential funding down the line.
Okay, thank you both. So with that, we want to thank our amazing panelists for joining us today. And please don't go just yet. We have some important announcements to share. So on March 9th at 8 p.m. Eastern, in honor of Women's History Month, we'll be hosting Anne Mir Ako, co-founding partner at Floodgate. So please be on the lookout for that information coming your way. We'll also be sending out a member survey in March so that we can learn more about the Accelerate Yale community, what kinds of topics, speakers, events that you all are interested in. And one lucky person will be chosen to receive an Amazon gift card when you submit your survey. So please be on the lookout for that survey, and we're looking forward to hearing your responses there. Again, a big thank you to everyone for your questions, for your participation in today's webinar. And we also want to thank Yale Fin, Yale Women New York City, and the Yale Black Alumni Association for co-sponsoring today's event. We'd also like to thank YAA, the Shared Interest Groups, for making this event possible. A recording for today's webinar will be posted on the Accelerate Yale LinkedIn, Facebook, and YouTube channels. So you can check those out all out there. So thank you all again.